How's it going, everybody? This is Tim with King's Options. It's been a little while since I've done this, but I figured let's start some of these up again. And this honestly is more for me than it is for you. Biggest reason is I find it helpful to talk through these things, and if you find it helpful as well as I talk through these, or at least it gives you some perspective, maybe you agree with me, maybe you disagree with me. It doesn't matter. The only thing that matters is that I'm taking a look at this and trying to evaluate what it is I see. Maybe what I expect, more just what it is that I see. Now, I'm not going to have anything fancy on here. I may put some lines as we go, but I really just want to start with this basic chart, and as I point things out, or as I see things, I'll go ahead and put some lines on there. Just to kind of help visualize things better. But when I actually trade, I'm not even on a daily chart. I'm usually on a 1 minute chart. So what do we see here? End of week review. What happened? This whole last week, we moved sideways. We popped up, but then we stayed kind of within the range of this candle. So this is Friday, Thursday, Wednesday, Tuesday, Monday. So this would have been prior Friday. I think we had a short week. Anyway, so for the past 6 trading sessions, we've been kind of at the mercy of this one candle. And let's zoom in on that a little bit. There we go. Okay, so that, and let's go ahead and throw a rectangle around it. Right, so we can put it there. And we're just gonna go with the candle bodies for a minute. So there's 2 things you notice. One, we also had, before these 6 sessions, the prior 4 sessions were also kind of moving sideways. So basically we've stair-stepped up because the bottom of this 6-period range is sitting on top of this 4-period range, actually a little above the first candle in that 4-period range. But we haven't really wanted to break down. We've wicked it a couple times, sure, and we've tried to poke our heads up above. These are all new all-time highs right here when you saw them, and this is the all-time high right now. Also keep in mind, this is the NQ. These are futures charts, and for the markets overall, that's what I'm going to be looking at because that's what I trade. So if you're seeing something slightly different because you're using the QQQ, for ES you're using SPY or SPX, it may look slightly different, but the shape of things should basically look the same. Alright, so that's the first thing I notice. Now, being at all-time highs, we've got some crazy stuff going on in the world right now. It always seems we got crazy stuff going on in the world. I'm going to get rid of this box. So you see what I'm talking about, right? Been moving sideways. And I don't really trust the tops. I mean, we could run, absolutely. I mean, there's nothing above us that says we can't run. And with everything going on in the world, it keeps volatility high, and with volatility high, we've actually been going up. So if for any reason volatility were to go back down, trade deals get put in place, I only see that as supporting a continued bull run. However, at the same time, the markets as a whole are extremely overvalued. I mean, they're really overvalued. I don't know if any of you are familiar with like the Buffett indicator, which, if I remember correctly, is the ratio of market capitalization to GDP. But right now we're sitting above 200%, which historical averages traditionally run around, I think it's like 75 to 90% max. With the last few years in this constant explosion to the upside, the historical average may have pushed 100%, but either way, above 200% is really, really high, and I don't like that. I don't think anybody likes that. So it makes me nervous when we start hitting all-time highs and we don't see much in the way of pullbacks. Pullbacks are healthy. Pullbacks are important. We do see some little pullbacks now and then. Like here's a decent little pullback. That wasn't bad. Here's a little bitty one. That wasn't bad. Obviously we have this number coming in that has served actually nothing but good news to all of us who were watching. We knew we were going to see something come back. Beginning of the year, we're talking January, February, so right after this current administration came into office and started making some changes. Well, changes induce volatility. Volatility induces, as a rule of thumb, negative movement, which is what we got. But we immediately came back up and started setting new all-time highs. So there's something to be said for that. Now, a lot of people are talking about tariffs, right? And all these things that oh no, the market's going to crash. I don't buy into that, not because of tariffs. And I tend to look at crashes a little bit different. I mean, I don't look at it as crashing. If I see something that's crashed, it's like, okay, it completely failed. It is no longer. The markets aren't going to do that. And I know other people have definitions than I do, and my definition isn't real popular. That's fine. But I do see up to a severe pullback, absolutely. Pulling back, if you consider that this move here, if I remember correctly, was in the high 20s, like 26%, maybe 30%, as far as a pullback, and we've come all the way back from that and gone even higher. The fact that we're still overvalued so heavily, all it's going to take is one thing, and one black swan event. And the thing is, you can't predict black swan events. That's why they're called black swan events. You don't know what it'll be. You don't want to know when it will happen, and you don't know what the results of that are going to equate to. You can almost only evaluate them looking backwards. But all it will take is one, and you could see the dominoes start to fall. And that's not to be particularly bearish. I think right now we actually have a lot of things to look forward to that could definitely take us higher. But we do need to see another pullback like this, and I think those at this point do provide some outstanding buying opportunities. I'm going to go ahead and pause this for a half second while I put some averages on the board, and you can take a look at where we are relative to some historical areas. But before we do that, there's one other thing I wanted to note. So this is end of last year, beginning of this year. You notice we popped up and we kind of made a double top. Now, with this kind of double top, especially with the second top being lower than the first, a downturn wasn't very unexpected. I mean, that's a pretty typical move off that kind of pattern. But my point is that everyone that sold from these areas, right, some of these people may have held on, especially because they would have placed stops up here, and if they held on for the long run, their stops didn't get taken out. And then you got these people, they're making sales. Could even be some of these people saying, hey, let's add to our position. We know she's going to come down. So you've got stops up here, lots of stops up here. So when you look at, let's place a line above there. Or just, we'll split the difference, ballparkish. And let's go ahead and right extension on, left extension. We're just going to run that across the board. Okay, so up here, what are these people doing? What are these people doing at these all-time highs? They are taking out these stops. Okay, they're forcing them to sell, forcing prices to go, or actually they're forcing them to buy, because those would have been shorts, and that's your short stop. So they're forcing them to buy, right? Which is kind of pushing the price here, and it may form a perfectly good base that we also launch from. We definitely got the sideways movement for it. Just something to keep in mind. Also, if this decides to break down, the first question is, since this is your spur into this area to take out those stops, when we come down, do these buyers come back and pick up in this area? And where did these buyers place their stops? I'm going to go to the first swing low on this run up, and that's going to be right here. So I'm going to say that we've got stops here, and we've got pretty much another area. You can call that a very slight double bottom, maybe even triple bottom if you want. But the point is, it's more like a trend that's heading upwards, right? And at each of these areas, so right here, you probably got a bunch of stops in this area. Below here, you get a bunch of stops in this area. As well, you've got some inefficiencies, some buying inefficiencies. The biggest one that I'm seeing is right where this line actually kind of is. So let's take a look. Okay, so you've got some buying inefficiencies right here. Excuse me. So if we were to pull down and test this area, I think we could definitely see like some wicking into here, maybe a liquidity run that might dip down and come back up. I mean, that's possible. Definitely, that's quite a few hundred points. It may take some days to do that, so it's possible. But really, I would look mostly to see us dip into this area. Major buyers, you got the support here, so if we drop off, you've got stops here, but more importantly, you've got stops below this swing low here. And then you get into the buying efficiency, which is here, and then we see if the buyers step in and hold on to their positions. And that's all we're looking for. I'm not saying what happens, but I am saying that with this inefficiency, with this level that we see right here, meeting up with these two tops, the question becomes, if and when we pull back, do we stop here? Or do we set another level? Do we rise some more, or set another level that says, okay, here's a common area of interest, and do buyers come back in? Shall we pull back to that level? But we're not there yet. Right now, let's see if we pull back. If we do, and we start to see that, yes, buyers are coming in, I'd say this is probably a good area. I may look to go long here on larger scale, you know, on a more long-term scale. So, but we'll see. Let's go ahead and put in some of those averages. And this is just on the NQ. I mean, I haven't gone over the ES yet. So let me put this on pause, and then I'll come back after I've got those averages and some other things up. Okay, so what I've got on here is Keltner channels, and I've got the moving average, or the exponential moving average at the 21 that is showing, but it actually takes into account 5 Fibonacci sequence numbers, and the red is when they are stacked to the downside, right? So everything is in line and they're all moving down, and they're stacked in numerical order. And then the yellow is when they're all mixing, they're crossing, so they're not in numerical order at all. And then the green is when they're all moving to the upside and they're all in numerical order. Those numbers, if you're curious, are 8, 13, 21, 55, and 89. And basically, if you got 5 Fibonacci numbers like that, and they're all running in the same direction, and they're stacked numerically, I use that to give me confidence in the trend, especially on a longer term scale like this. So as you can see, we're in the green. We've been in the green. Now the Keltner channels, I have 2 other plots, and it gets a little confusing when I turn them all on. So I pretty much just want to see where the ATR number 3 is, or the, sorry, standard deviation, third standard deviation is. Now the Keltner channels, I do use a 21 exponential moving average as my center line, which means that this particular EMA stack showing me the 21 works exactly the same as the center line would be for this indicator. But they are 2 separate indicators. If I turned it on, you'd see that these lines overlap perfectly. I'm not going to turn it on. I also keep the 1 standard deviation and 2 standard deviation, but basically just take the distance you see between the top line and center line, bottom line and center line, and imagine in 2 more lines equidistant from each other, filling in the areas. So as you can see, we're right about the 2 ATR in that realm to the top side. We keep touching, but we're moving along at a nice pace. And the reason the 3 is important is because, mathematically speaking, any average you're running, if you run a 3rd standard deviation away from that excuse me, away from that average, you start to run a 70% or greater probability of a reversion to the mean in whatever your numbers that you're averaging are. So I want to know when we get to the 3rd standard deviation, because it's telling me, okay, look, we might be in line for a good pullback, or might be a good time to, at least in this case, like if I'm up here, it might be a good time, even if it rides this line, to not try and go long term. Might want to wait till we see a reversion of the mean, like exactly what happened here, and then get back into the long side. And you can see it doesn't always have to do that, but we've been bouncing off this center line daily pretty well for the past what is this, pretty much since we crossed it down here. We've been bouncing on, and that was in April. So April, May, June to July, so 3 months, coming on 3.5 months. Not bad. Well, it was end of April, so let's just call it almost 3 months. At any rate, you see what I'm saying, that it is definitely holding to this. And those are the things I'm looking at. if you look at where the 21 actually is, if it were to come down and bounce off the 21, it is above that area that we were talking about, right in here. The inefficiency, the top line, based on these two areas. However, it's also pretty close. So those are combined factors that tell me, okay, that could be a good area if we do see a pullback to go long. The first thing I'm going to want to see is just whether when it comes down here, if buyers decide to step in. If they do, then I'm going to make a long position. It also gives me the best chance to limit my risk and keep it very much on the low side, for a much better move to the upside. So that's what I'm looking at as far as the NQ goes, and I'm going to leave it there today. In other days we may get to doing the other markets, but primarily I trade the NQ, at least right now, and as a result, I just want to show you what I'm looking at. I hope you find that useful, and yeah, tune in. We'll go ahead and do this again next week and see how it looks. So, all right, thanks. Bye.